The Hang Seng is down almost 1% now after it started off a little weaker.
Looks like we perhaps are starting a fresh leg down. It could head to my mind, targets of about 42,800 or so.
Highlighted data integrity issues along with various product complaints.
We think that they should be close to 5 to 6,000 crores kind of revenues over a 5-year time frame.
What is important to watch is whether market coupling comes along with MBED, which is market-based economy.
The Nifty is up about 26 odd points. The sensex is up almost 100 points.
I don't think the index is likely to do anything special. You broadly stay in a large range.
Aqualogica, which is less than 2 years old, is hit a 180 crore ARR.
The company is still under reasonable control. Being silent is no longer going to help.
So we have a 5.7% forecast for the current quarter.
But it's just lacking that momentum over the last couple of days.
Flows of money coming into India have been quite substantial and are increasing.
43,500 level is a very crucial one on the Nifty Bank. It's stuck in that range of 43,500 to 44,000.
It's quiet out there. There's a 3-point change on the Nifty so far with the last hour of trade and closing bell. We're coming to you from the CNBC-TV18 News studios. I'm Prashant. With me, my colleagues Rima and Nigel. Guys, hi. Afternoon.
Hi. This whole week has been quiet, right? And very ranged, barring yesterday where we saw that intraday recovery. But X of that, it's been this lackluster, lacking momentum kind of a market.
Oh yeah, momentum is lacking. I mean, that's the one thing which we are used to and we are not getting, at least this week over the last couple of days. So around 19,800, around where we left off yesterday. So nothing at all really to talk about. The levels all remain the same, both on the upside and downside. Nifty Bank is up 1/3% the last I checked. And that is, the weaker of the indices, all indices. I mean, notwithstanding today's small attempt, but it's not even at the 38% retracement or the full fall. Whereas the Nifty, without doing very much, I mean, over the last couple of days, is of course past that and a few percentage points away from all-time highs. Just to look at the broader market before we go further, the small cap index, which lost 1.25% yesterday, is coming back strongly. It's up about 0.75%. And the mid-cap index is more flattish. I mean, it's like almost a game of alternating. One day mid-cap, the other day small cap. Yesterday it was the reverse, and today, of course, the small caps are leading and mid-caps are kind of flattish. So not very much going on. Market breadth, the last I checked, was almost even Stevens, 1:1. Rima.
It's just been about an 85-point range on the Nifty, and today is the weekly options expiry. Well, banks and IT have also been playing that alternate role. So today, the banking index is up. The Nifty banking index is up 1/3 of a percentage point, while the IT index is a bit on the back foot, showing you a cut of about 0.3%. There are two pockets of strength. One are the entire two-wheelers. So whether it's Bajaj Auto, Hero, Eicher, TVS Motors, there is strength over there. And in the mid-cap universe, it's the specialty chemicals and the chemical companies which are doing well. So Deepak Nitrite, GNFC, PI, Naveen Fluorine, these stocks have gains of about 2 to 3%. But the stock of the day clearly has got to be Honasa Consumer,
Absolutely.
right? And there were so many naysayers. You remember during the IPO, the valuations are too high, 100 times. But the company, in their earnings at least, has proved them wrong, improving their margins, doubling their profits.
Indeed, Rima, and they're guiding for the second half of the year being as good as the first half. So 30% growth is what they're looking at. Margins will improve from here. And it seems the street is convinced with regard to what they had to say as well. So we'll get a deeper analysis later on in the show. By the way, two factors you should be tracking for the final hour. One is the Nifty weekly expiry. So till now, it's been a quiet session. Do we want to break either which direction? Remember, on the downside, 90,750, that's seen a fair bit of action, so that should hold out. But on the upside, the street is not prepared to see, 19,850. So somehow, if the bulls can get past that mark, then we could see a bit of a bounce that takes place. And that could be the much-needed trigger to move to around 19,900. That's on the index. The Nifty Bank, it's showing signs that maybe it's wants to take support at around the 20 DMA or the 200 DMA or even the 50% retracement of that move that we saw from around 42,000 to around 44,000. So that one's doing pretty well in today's trading session. What are the levels you need to track? How are things looking? Well, Mitesh Thakur joins us to help us out with exactly that. Hi, Mitesh. Good afternoon. When we spoke earlier today, the markets were yet to open. And if I pull up the Nifty, it's at the same spot, not moved at all. At around 9 a.m., you gave us a call on the index, and as of now as well, it's not moved at all. Which way do you think is going to swing on the Nifty, and what are you making of this outperformance of the Nifty Bank?
So, Good afternoon. I think the call was that the Nifty will be choppy, but within a range, and I think that's playing out.
Hang on.
Yeah, in fact, I think getting past 19,850, 870 is very important. The structure is slightly, getting stronger in the last few days of consolidation because we are not slipping from higher levels, despite marginally being overbought on the hourly and 2-hourly charts. So I think that's a good thing. But I think the momentum will come in only when we see the Nifty start getting past 19,870, 875. And then we could see a 150, 200 point kind of a quick up move. Till then, I think, it will be stock specific kind of trading. The Bank Nifty is doing better today, but I think maybe it's, partially making up for the underperformance of last many weeks. So my understanding over here is that the Bank Nifty, in case we see 43,800, until then the Nifty is not showing signs of a breakout, then I think, maybe we'll take some negative or short put option kind of positions on the Bank Nifty and then take it from there. So till then, I think it remains a market, which is broadly not doing a directional kind of a movement, but yet consolidating and being chopping around. So I think trading is very, very clearly a stock-specific kind of a game in the coming few days. And once we see Nifty getting past 19,875, then maybe, yes, you would want to take a long position.
Vinay Jaising, MD and Portfolio Management Services at JM Financial is with us on the show. Vinay, afternoon, and thank you very much for joining in. Now, Tata Tech IPO has been the toast of the town this week. In the first hour itself, it got oversubscribed. And already now, I think at last count, it's up 8-9 times in terms of a subscription. And we're still, halfway there. So this has put the spotlight on the entire ER&D sector in India, which helps manufacturing verticals like automotive, aerospace, defense, etc. Now, there are various listed players, KPIT, L&T Technology, Tata Elxsi, Cyient. Can you talk about the ER&D space? Because the stocks have run up. So where is the value now? What is the opportunity?
So it's a very interesting question you asked. We were discussing this in our morning meeting today as well. KPIT has a run of almost 30-35% after being one of the most expensive stocks in the IT service industry. But just we slow down a bit and look at what's happened to the growth for these companies. We are looking at the IT sector growing at somewhere close to 6 to 8% for this year. And the entire ER&D space would grow closer to the 15 to 20% growth. You have companies like Persistent, which will grow at 20 to 25%. Tata Elxsi, a little slower. You'll have companies like Cyient grow again in the 20 to 25% range. And then you have KPIT, which would grow at about 35-40%. Our analyst believes, Tata Technology would probably be, growing at somewhere between the 15 to 20% range. So clearly KPIT, Persistent and Cyient have better growth trajectory than Tata Technology as far as numbers are concerned. Now, we don't know a price of Tata Technology. We can just guess, what it is. But, based on whatever our reading is, there's a chance that the stock would probably, come at 50 times 1 year forward earnings on the first day of listing itself. And that's exactly where KPIT is. And KPIT has a far robust earnings growth. But keeping valuations into consideration, our preference is really on Persistent, which gets a lot of cloud-enabled technology with you, as well as Cyient, which is much more cheaper. It's got a DLM angle as well, the manufacturing bit. And its growth is pretty robust at 20 to 25%. So pretty happy at this space. Lots of run up, but I think still more moves as far as we are concerned to Persistent as well as Cyient.
All right. Hi, Vinay. Good to hear that thought in there. So on KPIT, you wouldn't add at current levels, and Tata Technologies on listing should be at around 50 times, or your preference leans towards Persistence as well as Cyient. But since we're talking about the Tata Group, let's talk about Tata Motors. There was some buying out there because obviously of fundamental reasons. But the other possibility could be that those holders of Tata Motors, they had a preference with regard to this issue as well. What's your view on the stock? I mean, it's seen a big run in the last 3 years, I think, from the lows. Well, it's more than a 5-bagger. We're talking about a frontline Nifty stock. Your take?
So, we've discussed the stock a couple of times in this interview. We are proud holders of it. The simplest way our analyst makes the story for us is twofold. One is it's one of the cheapest auto company is trading at an EV/EBITDA multiple of about 4.5. Most of the other companies are trading at 10, 11, 12 times EV/EBITDA multiples 1 year forward. It had an issue historically on Jaguar, wherein the company was generating a lot of negative FCF, and now Jaguar's turned around and you're seeing a lot of positive cash coming from them. Interestingly, next year, you'll have Tata Motors being net cash positive as a company as a whole. So attractive valuations, good FCF plus Tata Technology listing, which could add to about 10% of the overall current market cap of the company. Most of the analysts will be putting in 20 to 30 rupees per share. As far as the contribution of Tata Technology is concerned, you would see probably that itself number double up, and you would see another people in the future putting in as much as 60 rupees a share contribution purely from Tata Technologies for Tata Motors. So we are excited. One of the large caps we are holding on and even buying at today's level is Tata Motors.
I remember, Vinay, hi, good afternoon. End of last year, I think it was, we were looking at doing a piece, and at that point, based on the previous 10 years, Tata Motors actually was one of the worst performers in terms of Nifty stocks. It's done 75% this year, and now it's of course, done well. But even now, it's only 10% higher than the peak we saw in Tata Motors in 2015. So, of course, over long periods of time, it's maybe it's all relative, right? So relatively, what do you like?
Select the right stock at the right time. Just think of the problems you had earlier was all about Tata's going global. Yeah. And the global Jaguar valuations of Jaguar, but any other company in Europe as well, the valuations are trading at 1.5 to 2 times EV/EBITDA. Now when we talk about 1.5 times to 2 times EV/EBITDA, what we're saying is that the company will stop in a year or two, or it will be generating so much of negative FCF that it's really burning money. The story is totally changed altogether in the last year and a half.
Yeah, no, absolutely. I'm just checking when did Tata Motors, I think they bought this in 2008, right? I think 2008, 2009.
That's exactly the period of time you're looking at underperformance. Finally they're getting their limelight.
I remember I know, absolutely. The famous Chorus acquisition. I don't remember. I don't have clear memories of the JLR acquisition and where I was that day. But for the Chorus acquisition, I was in the studio and we were reporting on that particular transaction. But there was a different market, different kind of mindset back then. It was all, as you said, about India going global for the first time, going out there, buying these iconic big global companies. Of course, we've come a long way since. Vinay, what else are you doing? Some of the stuff, we've spoken about specialty chemical companies that you like, names like Tattvachintan. There's, I think, Archean, something we've discussed in the past. Anything new you've added since we last spoke, or you're looking at?
Probably two more names we are looking at. We're looking at Blue Jet, and, we're re-looking at Viatech Wabag, one in the capital goods sector, one in the healthcare and specialty sector. Very quickly on Blue Jet, here's a company again which has just got listed. Very strong cash flows. The company has 3 verticals of business. First is the ink used for CT scans or X-rays. The second is they make sweeteners, B2B production, and very, very big, 1:400 is the concentration which they increase. And the third is they manufacture APIs. Again, they are one of the few companies which have an FDA approval for their fine chemical / manufacturing of APIs. Stocks trading under 25 times 1 year forward earnings, and with a 20% plus return on capital employed valuation. So we're very excited about it. Again, our heart lies on the capex story of the country. So I would keep on reiterating, that's one space we as a house are extremely bullish on. One of the companies which again has got wings in the last couple of weeks, I would like to highlight to your investors would be Viatech Wabag. It's a water story. Remember, whatever happens on the government and election, the capex for the budget in water has gone up between 7 to 8 times. There are only two or 2.5 players in the overall water industry. There's an exchange, a little bit of Triveni and Viatech Wabag. The order book size is 4 to 5 times. You're seeing execution happen from them. Interestingly, as we talk, Chennai is getting desalinated water, and we are talking about close to 400 billion liters of water being desalinated in Chennai, which will help both the industrial belt as well as, consumption of drinking water at home. So pretty exciting, I would say, growth prospects for this company.
All right. Vinay, we request you to stay with us for a little bit longer. We'll slip into a short break. You come back, we'll try to get our viewers an exclusive story that we're picking up. We'll also get you excerpts from our exclusive conversation that we had earlier today with Mark Mobius. Stay with us. Welcome back. Well, we've been highlighting that the Nifty is as quiet as can be. So let's get you an exclusive story then. Kesharam Industries, that's higher in trade. Vivek is picking up some information from his sources on this particular company. Vivek, tell us, what have you been picking up?
Well, absolutely. The cement industry in the last couple of years has seen significant consolidation. A lot of important M&A activity has been happening in this particular space itself. And what we are picking up from our sources here at CNBC-TV18 is that Kesharam Kesoram Industries, this particular company may be under the block. We understand that Ultratech Cement has gone ahead and evinced interest to buy the cement assets of Kesoram Industries. Sources are indicating that Ultratech Cement is currently actually undertaking due diligence of these cement assets. We also understand at this point of time, Ultratech is exploring both buying out the existing promoter from the company, or the other option that they could pursue could be just the cement business acquisition. Now remember, Kesoram Industries has two segments. One is the cement business and the other is the rayon business. Now talking specifically about the cement business, they have a total cement manufacturing capacity of close to 10 million tons per annum, and this particular capacity is present across two states of Karnataka as well as Telangana. So Ultratech Cement, would be able to add close to 10 million tons per annum of capacity if this particular deal does come to fruition. Now talking about Ultratech Cement's capacity itself, capacity of over 130 million tons per annum, the company has set out an FY26 or 2027 target of adding close to 182 million tons per annum. So that is where they want to reach, and this particular acquisition will help them do so. Now talking about the existing promoter holding, now remember the total promoter holding in Kesoram Industries is close to 43.4%, and very interestingly, Pilani Investments and Industries Corporation, which is itself the Birla Group holding company, where KM Birla, part of the KM Birla Group holding company, they already own close to 14.92% stake in the company. Also, Century Textiles holds close to 2.5% stake in the company. Very interesting, we'll stay updated on as far as this particular deal is concerned. Also, we reached out to both Ultratech Cement as well as Kesoram Industries. At this point of time, we are yet to receive a response from both of these companies.
All right, Vivek, thanks a lot for that. Well, just to follow up with some quick analysis on that, first, just pull up the last 1 month chart of Kesoram Industries. Post its numbers, the stock is up close to around 50%. Also, it seems the street is sniffing that there could be some kind of corporate action. Just pull up the chart, that tells you the picture. 50%, it's already higher. Next up, what's Kesoram's problem? They have a debt of close to around, roughly around 17 to 1800 crores odd. And their borrowing cost, that's the interest that they pay, is nearly around 18-19%. So the high debt and high interest cost. What works for Kesoram though? They have a large capacity, close to around 10.5 to 11 million tons odd of capacity is what they had. And in terms of valuations, it trades at around $65 per ton. That compares with replacement cost of around $100 per ton. So that's normally the benchmark that you look at when there is a deal that's happening in the cement industry. So that's another point. Valuations support them. What do you need to track from here on? One is the structure of the deal. Remember, Mr. Birla, he already has an indirect holding in Kesoram Industries via those two entities. That's the Pilani investment and the other entity as well. So roughly around 16-17% is already what he has out of the 43% of the promoter entity. The valuations of the deal are going to be very, very important. At what price is it struck at, if in case it does takes place? And how is this deal structured? Because as it is, you already have part of the promoter entity that's already, already registered as a promoter entity. So how do they work it? At one point of time, there were talks that there could be a rights issue. So you'll have to keep an eye out on that front. And also we'll have to eye what happens to the rayons and the chemicals business. The management has been talking about separating that business in the past, but we haven't seen any progress. So what happens to that business as well? How does it help Ultratech Cement? Well, they have already drawn out a plan where they reach close to around 185 million tons odd by 2026. Well, this helps them get closer to around 200 million tons and also better market share in West as well as South India, because bulk of the sales of Kesoram Industries are in West and South India. Those are all the data points that you need to keep in mind. But Vinay is still with us and we have kept him back to get his view on this. So Vinay, in the past, we have had a chat about mid-cap cement. So we thought it would be wise to get your view on this. Some of those stocks, I think in the past, you've spoken about Orient Cement, and there was some buzz on that front as well, though we don't have any confirmation. But that one's done well for you all. What's your view on this deal and also mid-cap cement from here?
So our perspective, the cement industry is a play on capex. We like the capex industry. It goes with the fact that the Indian budget has increased the overall capex outlay by 5.5 times in the next 10 years. So it's a must-own space for yourself in your portfolio. You can play it via, obviously, the large cap space, and that's where Ultratech comes in. But where our interest levels lies in mid cap, there was a time wherein, Orient Cement was something we were buying pretty aggressively. Now the current valuation, we've taken a pause out here. Most of the small cap or mid cap stocks in the cement space trade between the 6 to 7.5, 8 time EV/EBITDA multiples. and you have the large caps trading between the 12 to 14 time multiples, or a little high depending on the large cap we are talking about. So really the arbitrage which a large cap company that buys a small cap company is getting that 6 to 8 times EV/EBITDA multiple straight away at 1.5 to 2 times its price for them, which is shifting off to the 12 to 14 times multiples. So herein what we have been buying, as you said, was Orient Cement, and now we are looking at JK Lakshmi. Again, a very similar story to any other mid-cap name, a good volume growth, 10 to 15% on the top line, a key gainer of increase in demand. Incrementally, you're not seeing too much of supply come in as much as demand. And yes, coal prices did go up. So the last quarter was not very good for the cement industry as far as EBITDA per ton is concerned. But now as we're seeing the pricing power come for the industry, you will see better EBITDA per ton in the next quarters to come for the entire industry. And small players like be it JK Lakshmi or Orient should gain on the same.
Thank you, Vinay, for joining in and providing your insights on a variety of sectors. The stock of the day is undoubtedly Honasa Consumer, still locked in an upper circuit of 20% after reporting their Q2 numbers. Mangalam first joins in to walk us through the key details of the numbers.
Well, that's right. Mamaearth parent Honasa saw its shares rise almost 20% in today's trading session. From its issue price, it's up nearly 25%, and from the post-listing lows, it's up 65%. Good results were expected. The company reported good results as well. 21% jump in their revenue, and the EBITDA jumped by over 50%. That means a margin expansion in excess of 150 basis points. Even if you account for the one-off in their margins, there was an expansion of 70 basis points, and that's what the street liked. The net profit on a low base nearly doubled to closer to 30 crores versus 15 odd crores. The underlying internals were strong as well, with 27% volume growth and 265 basis points ad spends realization in the first half of this year. The management commentary to CNBC-TV18 was rather positive as well, where they said that they are looking at 30% plus sort of growth coming by in the next couple of quarters, with more scope for margin expansion. And Jefferies upped their estimates by 5 to 6% for FY24 on the EBITDA and net profit, and as a result of which, them having initiated coverage in the stock just a couple of days ago with a target price of 520 has been increased to 530. So overall, benefits for Mamaearth.
We clearly see that as brands grow in scale, and there are structural efficiencies which come across marketing and the leverage that comes in, because as the brand awareness increases and the need for similar level marketing decreases, then in percentage it keeps going down. From a medium and long term perspective, I think our endeavor would be to keep looking for more opportunities on how, while we continue to grow faster than the market, and how we can find more opportunities of efficiency and leverage.
All right, well, that's some views coming in there on Mamaearth. Let's listen into an important conversation now. Mark Mobius, of course, is someone who needs little by way of an introduction. He's the pioneer in terms of emerging market investing, and he's done that for over 4 decades now. We caught up with him earlier today. He recently stepped down from his position as Mobius Capital Partners to embark on a new journey. Listen into what he had to say about, of course, the prospects for India as he sees it. Listen in.
The biggest mover for India has been the adoption of technology by the government, the digitization of the government services, of course, starting with the identity card, but then moving into so many areas, which has made government more efficient and has made the individual Indian citizen aware of the opportunities that in technology for them in their own life. So I think this has been an incredible journey. And of course, I think Mr. Modi has to take responsibility and credit for this change. It's quite a sea change. It's something that is quite remarkable.
Okay, that's interesting. So the adoption of digitization by the government, which has been a big focus area, is something that continues to be of interest to you. Where else do your interests lie in the Indian market, Mark, over the next, say, 12 to 18 months?
I'm very interested in the travel and tourism area, because in my trip recently to India, all the sites, all the historic sites were packed with Indians. We were the few foreigners available there. I'm sure more foreigners will be coming, but It's the Indians are now really having the money and the eagerness to visit their historic sites and tourism sites. And this is a big, big growth area, I believe.
Zooming out a little bit, how do you see the environment for global markets next year? We've seen yields cool off. Crude prices have also climbed down. Now, this year was one of the best years for the United States. We had the S&P 500 rallying 20%, the NASDAQ gained 35%. What kind of a global environment do you envisage next year, 2024?
I think it's going to be pretty good because you're seeing inflation coming down pretty rapidly. And interest rates, of course, will follow and are following. So the market should be in a pretty sweet spot for that reason. However, it's important to note that with too much a decline in money supply, of course, markets sometimes suffer for the lack of liquidity. So that's something we have to look at. But I would think that we're looking at a pretty good year coming in the markets. It's going to be very interesting and I think exciting.
Standing, if the possibility of no Fed rate cuts, because the street is right now penciling in the Fed cuts rates, which will be positive for equities globally. What if that scenario doesn't play out?
Well, it's very important to remember that there's no direct correlation between interest rates and the market. Sometimes interest rates go up and the market goes down. Sometimes interest rates go down and the market goes, it's not a direct correlation. So given that situation, we have to look at other factors. And the other factor in the US is, of course, the economy, the growth of the economy. Oddly enough, with all the challenges, China, Ukraine, every other challenge you could think of globally, the US actually becomes more active. Industry tends to benefit from these kinds of changes. So we're seeing employment at high levels and the economy doing very well, even in this very difficult political environment. So I think this is going to continue into next year.
I do want your thoughts on also how India is one of the youngest economies, right, across the globe. I mean, if you look at Gen Z, as we call it, 30% of India's population is in this age bracket of 15 to 25 years, and they will be the next big consumers. What do you see, or rather, how do you see the consumption pattern evolve? And as an investor, how would you capitalize on this?
Well, that's the key. The key is the youth of the Indian population. That's really very exciting, not only for India, but for the globe, because it means that companies around the globe will be targeting India as their next big market. So this is going to be very, very exciting going forward. And one of the reasons why you're going to see much more investment in India is because of that. Companies around the world will want to take advantage of this young population who are getting richer and are ambitious, want to work, want to play, want to spend. This is all very exciting.
Okay. Mark, just one question from my end. Your new book is out, The Inflation Myth and the Wonderful World of Deflation. Can you tell us the core thesis behind this book?
Yes, well, I wrote the book because I found that the inflation statistics were not very accurate. That's the first thing. But I also wanted to point out to people that technology is like actually making things cheaper. Now, in currency terms, things look like they're getting more expensive. But if you look at the quality, quantity, and availability of high-tech products that are being impacted by technology, you'll see that life is getting much, much better. And we are actually in a deflationary environment. Of course, economists hate the word deflation, but that's actually what it is.
So finally, Mark, you want to advance your target. You had the last time we spoke, you had a sensex target of, I think, 1 lakh in the next 5 years. We're already at 66,000. Do you want to, speed it up a little bit?
I think I'll stick to that. I don't want to go much higher than that, at least at this stage. Ask me next month.
Interesting conversation there. We'll slip into a short break. On the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. We also get you a few BTST calls from our technical expert.
Welcome back. Well, it's time for our favorite segment, D-Street Chatter. Nimesh joins us to tell us what he's picking on in terms of dealing room chatter. Hey, Nimesh, tell us.
Hi, Nigel. Relatively a quiet day of trade. Of course, tomorrow is a half a day for US markets and Monday we have a holiday. So volumes are going to dry down a bit is the general sense. But today the volumes are active. The flows are quite mixed. But I understand there's going to be a small market at close, basket buying as well at leading FID. So that's something might have an impact in some select stocks in the last 30 minutes of trade. The sector rotation continues. So today for a change, the auto stocks are buzzing in trade. Well bid as well by large institutions. And on the other side, some bit of profit booking is visible in the pharma names. But technically, again, for the last many days, that's been the constant feedback that 19,800, 19,850 is a very strong resistance on the upside. So that's playing out at least for this week. I guess for next week, as I said, it's a truncated week. But on the expiry day on Thursday, there is FN expiry, there is MSCI rebalancing, as well as the state election outcome. So then, those exit polls will come. So it will be a very tricky expiry for next week. But for today's, I guess it's a mixed day in terms of flows. But there is selective buying continues in the mid cap and the broader markets.
Okay, Nimesh, in terms of specific stocks, what are you picking up?
Also, in terms of individual names, the first stock on my list is Tilak Nagar Industries. That stock is under pressure today, but been a big outperformer this year. Down 5% interest rate. There was a block of nearly 1.5% equity, and I understand the promoter entity was a seller in today's block. So the disclosures will be quite interesting as to who's bought and who sold. The second stock is BSE Limited, been the best performing stock of this year. But from the 52-week highs, has given up some bit of gains. Even in today's trade, there is delivery-based selling happening. So looks like some bit of profit booking at higher levels in BSE of late. The third stock is Aegis Logistics. Was part of my charter list a few days back as well. There was a clean out trade from a long only fund. That selling is largely over. Now I understand a leading hedge fund is an active buyer, and that's the reason why there is high delivery volumes. For the last many days. And the last one is DLF. Within the real estate names, this stands out purely on strong buy flows. So expect high delivery volumes, and there is some bit of long FI interest back in DLF as well.
Important list of names there. Nimesh, thank you very much for joining in. Mitesh is here with us for a few BTST calls. Mitesh?
So on the BTST side, I think granules after a pullback looks to be bouncing back. So BTST here with a stop at 365 for targets of 378. And BPCL, I think, is making fresh high. It could see momentum. Crude chart is weak. Higher chance of it going up. So buy with the BTST with the stop at 406 for targets of 418.
Okay, all right. Thanks a lot for that, Mitesh. Well, Cipla is under pressure as details of the US FDA warning letter at its Pithampur unit have emerged. Vivek joins us to fill us in with more details on that. Vivek?
Well, that's right. So CNBC-TV18 managed to access a warning letter issued to Cipla. The company disclosed this particular warning letter to the exchanges on November 18th. This is after the US FDA had post the inspection of the facility had given an OAI classification, an official action indicated classification to this particular facility. The details of the warning letter is what is spooking the stock currently. When you're talking about the key points, number one, they've highlighted data integrity issues and with regards to products compliance as well as microbial contamination. The other important point is they've mentioned that at this point of time there are similar observations that have been recorded even in past inspections that the US FDA has found out. This is both with regards to Pithampur as well as Goa. Remember, now Cipla has two US units under the warning letter. Number one is Goa and the other one is Pithampur that it recently got classified. Also, what the US FDA has done is it's asked the company to go ahead and take help of third-party consultants to address the issues that the US FDA has found out. What does this mean and what is the impact as far as Cipla is concerned? Currently, it is status quo. All of the products that it continues to export can continue. But however, couple of important products, both generic Advair as well as generic Abraxane, both of these products, analysts had penciled in a delay, but there is now an expectation that it will be pushed to FY25, and that is one key disappointment. Along with that, given the contents of this particular warning letter, there is a risk that there could be a further escalation, and that is something at this point of time we still don't have clarity on.
Thank you for explaining that. That's Cipla down 8%. Ambarish is with us on the show now. Ambarish, any thoughts on Cipla and the news?
No, in fact, I don't track Cipla very closely, so it's a bit difficult for me to really advise on that.
Okay, all right, Amrish, but normally when you join in, before market closes, you normally give us this one stock that you think offers good value from here on. Which is the stock you're looking at? What is the rationale behind it? And what's the time frame?
See, the stock is Havells India. It's like a leader in electrical product chain. They are there in both the segments, industrial as well as consumers, and have products like cables, switch gears, motors, and consumer goods like ACs, appliances, lighting, fans, and geysers. 5 years back, they acquired Lloyd's brand, and the integration seems to have gone off decently well. And Lloyd's brand is about 20% of the revenue. But I think the only concern is that it's yet to contribute to the bottom line, and hopefully this should happen over the next 4 to 6 quarters. They have about 6,000 crore plus categories, which is cables and wires, consumer lighting, fans, residential switchgear, and ACs. Until now, it was more of the aspirational brands which Havells had. And now they've got into the premium segment where the margins are clearly much better. Another focus area is the white labeled business. For exports, which is similar to what Amber has been doing. So Q2 earnings were decent with revenue up about 6%, EBITDA up about 30%, and PAT was 32% up. In fact, the input prices have corrected, so the margins have really shot up. And the B2B business is doing extremely well due to the momentum which is there in infra and real estate. So my expected EPS for FY25 is about 20, and the target is 15.95.
1595 is the target on Havells. Amrish, I know you look at SBI cards. What have you made of the recent RBI circular on increasing the risk weight? Because analysts estimate that SBI cards is going to be hit very hard because 100% of its portfolio will now witness an increase in risk weights. Have you assessed the impact? And if someone holds SBI cards, is it a big worry?
No, see, clearly there will be some impact, no doubt. Being one of the largest player in that space. But then we should also remember that the spends also have been increasing. If you look at the last month's spend, I think that's a record. Across the sector, and clearly SBI cards will benefit out of that. But due to this, announcement by RBI, like we already seen some correction in SBI cards. We could see a bit more, but I would clearly use that as an opportunity to buy at lower levels because whatever said and done, the credit card spends are going to increase continuously, and I think we should see much better days.
Okay, Amrish, we want to ask your views about what one could do with Raymond. Because before we do that, I just want to quickly play out a soundbite of Hetal Dalal, who is with IIAS. They're an investor advisory sort of service. They advise boards, shareholders on corporate matters. The news has been there, of course, for everyone to see. There's a public spat going on between the promoter of Raymond, Gautam Singhania, and his wife. There are serious allegations which have been made. This is Hetal speaking with us earlier today. Then I'll come to you, Amrish.
I think now that has begun to impact the stock price, it is incumbent upon the board to provide clarity on what is the way forward and what they are seeing. See, at a very basic, the board now needs to at least provide some kind of assurance to shareholders that despite all of this happening, the company is still under reasonable control. Being silent is no longer going to help. So I would argue that at this stage, given that all of this has become public, Nawaz Modi's gone public with these accusations, it has impacted the stock price. It is all the more incumbent upon the board to articulate what it has done in terms of an action and allay some of the fears that the market seems to have given this entire acrimonious situation. See, ideally, if you look at the situation, the board should run an independent investigation. It should ascertain what the facts are, whether what Nawaz Modi is now talking about, there are legs to it and there is a factual basis for all of it, what actually transpired. Based on that, they have to then decide what is the course of action. But I do agree that given the current situation, there is likely to be a concern in terms of the efficacy and smoothness with which the board will function or board meetings will be conducted and function. So I think this is far more complicated in terms of, it's not isolated in terms of saying that this is a domestic matter. It's clearly reached the company and both of them are on the board. So therefore, the board needs to step in.
Okay, that's Hetal Dalal. Amrish, as a stockholder now, as one watches this play out, unfortunate, of course, but what's your view?
Normally, whenever such issues happen, it takes off, the focus of the promoters of the business. But then, as far as Raymond is concerned, clearly it's a good professionally managed company. It's an autopilot with minimal promoter intervention on a day-to-day basis. So I don't think immediately there's much to worry as far as the shareholders are concerned. But we also need to see as to how the whole settlement plays out. Because, as per the demand of Ms. Modi, if the equity is transferred to her and the two children, I think that will create a fresh issue going ahead. But then if Mr. Singhania has his way and he remains a trustee of, whatever their holding is, then I suppose it will be status quo, at least for some time.
Amrish, I don't know if you've discussed this before. As per rate gain, it's down 8%. There was that QIB which happened. I think the shares were allotted yesterday. So I'm not sure if some of that share is hitting the market today. Looks like it, but it's down sharply. Results for the second quarter have been solid. Guidance, etc. I think they're guiding for Reema. I think you spoke to them last. 30% growth guidance for the foreseeable future.
65% for this year, but the organic growth will be about 30-35%.
30-35%. Any thoughts if you've looked at this business?
Yeah. I suppose the business is doing extremely well. I mean, both your travel, tourism, hotels. The whole segment is doing well. So clearly, rate gain is going to get benefited from that, and also the management also has really talked about a good growth going ahead. So I would surely utilize this correction because of this QIP, and whoever is selling, I think one should be looking at buying at these lower levels.
The stock at 659 is still above the QIB share allotment of 643. So even after this 59 rupee knock that we're seeing, it's still above the price at which the investors were allotted shares. Amrish, do stay on. We need to slip into a very short break. We'll come back and talk more about stocks. But listen in to some opinion that we got earlier today from Gautam Shah, founder and chief strategist at Goldilocks Premium Research, with his views on the markets.
I think one has to play themes. One has to just forget the Nifty and the Bank Nifty, play themes, sugar, fertilizer, insurance, auto ancillary, infra, PSU. I think that's where money and wealth is being made, and that's where one should focus on. IT, pharma, auto, and PSU, which continues to be an existing theme, I feel would be the star performers between now and, say, May 24. On the downside, very clearly, 19,450, 500 has become a short-term base. So till we are above this number, I think the bulls have some control over the market. So I think that could be used as a trailing stop loss for traders or for positional investors. Unlike 2003, 2007, when the markets got into a corrective phase, what happened was everything fell for the time being because the Indian markets was driven by foreign money. And now because it is driven by domestic liquidity and domestic money, sticky money, what's happening is that wherever any pocket turns overbought, it goes through a correction just for the short term, but whereas the other part of the market is strong. I think even currently, if you see, there are certain stocks which still stand out. While Bajaj Auto has clearly been the star performer, I just get the feeling that some newer stocks might join the party. So a Maruti can do very, very well from here. A Hero Moto seems to be coming out of 12-15 months of underperformance. That's a stock, which could potentially be a dark horse over the next 6 to 12 months.
Welcome back. Well, Amrish Palika still with us. Amrish, we just had a story that was broken here on CNBC-TV18 on Kesoram Industries. Now, over the last 10 years, I have seen that there has been plenty of anticipation that maybe UltraTech Cement at some point of time will take Kesoram Industries into its fold. My colleague Vivek is pretty sure this time around that there are stocks and maybe we'll see a deal. What's your view on Kesoram Industries? It's at around 124 rupees, but still on an EV per ton basis, it trades at less than $65 per ton. So in case of a deal, well, it could look up. How would you think this plays out?
No, clearly, there is a lot of consolidation happening in the industry. And I suppose being the same group, you'll have this possibly taken over finally by UltraTech. And looking at the valuations is still quite cheap. And in fact, today, I think there will be some concentrated buying, because of which we have seen some action today itself.
Okay. There's about 6 minutes to go for market closing now. And we're coming through nicely with absolutely no change on the index. So 2 days in a row now, things have been very, very quiet, at least at the index level. Cipla today, Amrish is seeing a very large cut. Any thoughts on this one?
No, in fact, as Cipla, I don't really track very closely. It's a bit difficult for me to really comment on that.
What about something like a EID Parry? It's like the last remaining stock of the Murugappa group, which is still not at all-time highs. Actually, there is maybe one more, but any thoughts? Have you tracked this one?
See, EID Parry, again, I cannot comment because of other reasons. In fact, my brother is a director, independent director on the board, so I normally don't comment on the companies where we are associated.
Okay, all right. 8%, 9% today on EID Parry. So that's about 533. And I think Nimesh had put out something on this with regards to on his D Street chatter list a couple of days back. Praj Industries is another one which is moving up very sharply, 7%. So, it's the Nifty is not doing very much, but broader market, there is a lot which is going on. Amrish, we'll leave it there for today. Thank you very much for joining us. It's a pleasure. So why not actually use the couple of minutes we have before market close to run you through this list of names which have got huge volumes. So HPCL, oil marketing companies, is turning out to be actually a great November so far. HPCL is up 31%. In the month so far, and I think BPCL would have done something in a similar way. 20% on BPCL. IOC is up 15%. I mean, oil marketing is doing well.
So just one word on BPCL. Yeah. The board meets next week to consider an interim dividend. Yeah. So that came out about 24 hours back. So the stock rallied yesterday. I think it was up the top Nifty gainer, 3.5% rally. It's followed it up with another 2.5%.
There has been
some anticipation around.
There's some corporate action, etc. Some anticipation around that as well. EID Parry, I just mentioned, 8.5% sharp mover. We just had, by the way, the EID management with us a couple of days back. Honasa is up 20%. That's Mama Earth has been locked up, and bulk of that gain came through while we were speaking with the management earlier on. Man Infra is up some 12%. It'll come up. It's got very large volumes, 177. There is Indiabulls Real Estate, which is up 5.5%. Praj, I just mentioned. ABFRL, people have been talking about Trent, which has gone one way, and ABFRL, which has gone the other way. ABFRL is up about 5.5%, so big underperformer in that space. 226 on ABFRL. Awadh Sugar, Renuka, Uttam Sugar. So these sugar names are doing very well. Of course, EID has got a sugar business as well. Jaiprakash Associates back again, 7%. Stocks back at about 19 rupees or so. There is Snowman Logistics, which is up some 8-9%. Senco Gold, it's almost 750, 5.5% higher. So this is not a market which is wanting for names in the mid and small cap space, which are going up with sharp volumes, and you got plenty of action going through there. I just look at the mid and small cap indices, 3/4 in the small cap index as we kind of wind down today, and the mid cap index will end absolutely flat. So pretty similar at the index level in terms of where we started, this show at 230. The Bank Nifty's got about 1/3%, and the Nifty's got nothing, 5-point change as of today.
Cipla's, has seen a big crackdown as the Pitambur unit has got a warning letter where there are, data integrity issues. So the stock is down nearly 8%. You'll talk more about UltraTech Cement and Kesoram, so I'm not talking about that. But IT names like LTI, Mindtree, TCS corrected a bit. Titan has been doing very well this whole week as it hit that 3 lakh crore mark in market capitalization. But today, Titan saw some profit booking and the stock was down 0.5%. Two-wheelers were in top gear. Hero MotoCorp, top Nifty gainer, 4.5%. Bajaj Auto, 3% higher. Eicher Motors, 1.5%. And TVS Motors looks good. And Bharti Airtel, there's been a stealth rally taking place in Bharti Airtel day after day. This week, it's seen a rally of 3.25%. Month to date, it's seen a rally of close to about 7%.
Well, a few stocks, they started off in the green, but they're ending in the red. Case in point being a CG Power. The stock was up 7%. It's going on with a cut of 2%. That's a swing of around 9% from the high point of the day. Zomato as well is under some pressure. That's down close to around 2%. Just thought we'll highlight a couple of those names. But on the flip side, there were other stocks that were actually in lower circuit. These are the 5% stocks, but they go home at upper circuit. SEPC, they have a fundraising plan, which is the rights issue that's expected to start in the next few days. That stock is up close to around 5%. In the morning, it was down. Suzlon Energy was down 5% with sellers in the first hour of trade, I recall. That goes home with a gain of close to around 5%. So the last few days, Suzlon had corrected from around 43-44 rupees to around 36 rupees. Today, in fact, it managed to put on some gains. Genus Power, the management spoke to us here on CNBC-TV18. They're talking about revenues for this year, moving to around 1,200 crores. And they said that for the next year, it will be more than 2,000 crores. So that's why that stock had recovered from the low point of the day. Man Infra, as Prashant said, well, the reason the stock is up is because they're going to be considering a fundraising plan. Snowman Logistics as well, up close to around 9%. And let's find this down with a banking name. That's Yes Bank. On a low pace, the stock actually is up close to around 25% in this month itself. And it was at around, I think 16 rupees odd. Now, in fact, that one as well. Volume's rather high, so that's why some of these stocks come on your radar. But at the end of it, you have the full day of action.
And no change on the Nifty. Absolutely no change.
No change at all on the Nifty. Let's get that up. I don't know how many times it's happened, but I think averaging maybe we'll get 5 points either in the positive or the negative direction. I think in the negative direction actually, but because the average of the last 30 minutes will be taken with volume and price action. What a day.
And what a day to report about also, right? Very, very range, very quiet. But we're going to wrap up today's trading action with the news that the Nifty holds on to 19,800. Banks outperform. The Nifty Banking Index goes home with a gain of about 0.3%. And remember, today US markets are shut. So there is no cue coming in from the Wall Street, at least, in terms of a direction. We will take your leave on closing bell. Thank you very much for watching. Don't go anywhere. Our Thursday special, Big Deal, comes up next.